Forget JP Morgan Chase. Forget Bank of America. There's a new bank on the block that's not playing by the old rules and is already bigger than some of the most famous names in finance in terms of users, but it is a fraction of the market cap of the banking giant since it's in the early ends of its growth story, as it only operates in 3 countries at this moment. Stay tuned as we will be breaking down the business fundamentals of Nuholdings and why we will be adding this to our educational portfolio. Founded in 2013, Nuholdings currently operates in Brazil, Mexico, and Colombia, and is known for its digital-first, customer-centric approach. It offers products such as credit cards, digital bank accounts, and payment loans. Since its founding, it focused on providing banking solutions to the underserved, and today it has over 122 million members, which is 60% of the adult population of Brazil and 13.9% of its recently entered Mexico and Colombia markets. It's accomplished its stickiness with a nearly 83% monthly activity rate. Now, its rapid growth is set by its founder, David Veliz, on the belief that a lowest cost and best customer service will always win out, and it certainly has. For a banking sector that is widely hated, they pride themselves on being a widely loved brand with a net promoter score nearly 3 times higher than incumbent banks, even as they enter new regions like Mexico and Colombia. Even though Nubank calls itself a technology company that just happens to be in banking, they make money in similar ways to other banks, which is primarily through interchange fees and interest income. It's small now, but they're also growing their ancillary referral services into insurance, self-service, and shopping, in which they will provide access to their 122 million members for a fee. By far, interest income is their main revenue stream, driven by unpaid credit card balances, personal loans, and the float in big accounts. With their high activity rate plus penetration, interchange fees are an easy revenue stream in which they earn a small fee from merchants anytime their credit cards are used. They're able to make all this money and still be one of the most loved brands in the world, which is just incredible. Now let's look at their financial picture. So Nubank just released Q2 2025 earnings on Thursday, August 14th, so we have some fresh data. Revenue grew 28% year over year and now is $12.8 billion trailing 12-month revenue. On a currency neutral, which removes the impact of fluctuating exchange rates, the revenue growth would be even higher at 40%. Net income grew at 30% year over year and trailing 12 months at $2.3 billion, which gives Nu a trailing PE of 28. For a bank, that is high, but we will evaluate this metric against super app peers for growth. Overall, it is encouraging to see profit plus revenue both grow faster than the new member growth, which was at 17%. This means Nubank is generating more from each existing customer, which has been a part of their thesis of minimal customer churn and the desire for the underbanked to stay and grow with Nubank. Besides revenue and profit growth, there are 2 key financial metrics I pay most attention to. First is monthly average revenue per active customer. Nubank slowly been growing it and now generates $12 per active customer every month, which is significantly higher than the cost to serve each customer at 80 cents. Their goal is to grow this to $20 or $30. This growth would be key because as that would mean they're successful in cross-selling to existing members and or their customers are getting wealthier, so need more complex financial solutions. Traditional banks have a much higher ARPU at $40 plus, which Nubank just won't reach, since they pride themselves on simplicity, low fees, and serving those with lower income, so there's less deposit income to get interest off of. As they close the gap on ARPU and can continue their incredible user growth, it will just accelerate even further the company and command a higher earnings valuation. Second is monthly cost to serve an average customer. This metric is one of Nubank's main competitive advantages, in which they consistently are less than $1, which is 85% less than traditional banks. They're able to maintain this by having a fully digital bank with a focus on automation and minimal spend needed on customer retention, since customers love banking with them. I want to see this stay below $1, since this is their competitive advantage for how they are able to generate so much profit when a lower average revenue per user than traditional banks. Spending $1 to get $12 on 100 million members is incredible and really gives them the operating leverage to get more profits with their insane user growth. For Nubank, there are 3 key things I will be monitoring for my thesis. First, I want to see that they can stick to their core fundamentals and embrace their lowest cost, best service, best product mindset. So far, they have been excelling on this. which is the main reason they're able to perform as well as they have. For service, the Net Promoter Score remains high, and that makes Nu a beloved brand. We just discussed cost to serve and see how they are 85% lower than incumbent banks. For innovation, they continue to focus on that, which I have no doubts they will, since founder David Veliz has said multiple times his biggest fear is complacency. They keep introducing new services for users, like an investment account, insurance, cell phone, and lately has been focusing on using AI to generate hyper-personalized financial platforms for users. For my second watch out, I want to see Nubank continue to expand to new countries and new continents, to be a global brand focused on helping the underserved. With operating in just 3 countries, I believe they can grow up to 200 million monthly active users, which 2x is incredible. However, to become a company that can 5x their market cap, they need to get to 300 to 500 million members. Their profit per user is just so profitable, the more users they get, the more that directly goes to their bottom line. I am encouraged to see Nubank invest in neobanks, Time and Jupiter, which serve Africa, Southeast Asia, and India, and perhaps we see them take greater interest in the region, similar to how DeepLocal wants to serve the global South. In parallel, even expansion for them is to take a playbook from Mercado Libre and grow within South America. Argentina, Peru, Uruguay, Chile all seem like logical next opportunities for them. Third watch out for my thesis is seeing them grow from being a bank primarily for the underbanked to a bank for everyone. I realize I'm downplaying how incredible it is that they serve 60% of the adult population in Brazil, but would love to see premium, higher net worth individuals also join Nubank. This would help them accelerate the average revenue per user without passing on fees to lower income individuals. A key strategy for them is to grow their Ultravioleta program, which is similar to American Express, is geared to premium members with perks. Ultravioleta membership provides cash back, lounge access, an international Zims card, and much more, and so far has been very successful for them in attracting higher net worth individuals. Those are the 3 key things to monitor in the quarters ahead. My dad and I will now share why we are excited to add Nu to our educational portfolio. Before we do, please read the disclaimer in the notes below. We're not financial advisors, and anything we say should not be construed as formal advice or a recommendation. Also, if you enjoy content like this, please consider helping us out, and please click subscribe, as we aim to cover each week long-term innovative companies. Now onto my thoughts on why we will add Nu. As we've just seen, Nu is an incredible company with top-notch revenue and profit growth, backed by tailwinds of the growth of Latin American digital banking. This has made Nu a watchlist entry for this portfolio. To add Nu, however, it comes down to valuation. Because Nu is generating substantial and grown profit, trailing price to earnings is an important metric for comparisons. However, since revenue growth is so significant still and will accelerate earnings, I'll be looking at a PEG ratio and compare it with companies with regional leadership in super apps for digital payments in Mercado Libre, SoFi, and C Limited. Currently, Nu trades at the lowest PE of 28. Their expected revenue growth is around 30%, which is about the same as Mercado Libre and SoFi, but less than the 40% of C Limited. When taking the ratio of PE and revenue growth, Nu has a 0.9, SoFi has a 1.6, and Mercado Libre and C Limited are greater than 2. This tells me Nu is substantially undervalued compared with peers, and since it's just slightly under 1, it is fairly valued on an absolute basis as well. With this reasonable valuation, my recommendation is to add Nubank to our portfolio. I'll cover my framework in a future episode, so please do click subscribe for an alert about that episode. However, to walk through my framework, first, is it founder-led? A strong yes, led by 2 strong co-founders and CEO David Veliz and Chief Growth Officer Christina, who both believe the mission and are super long-term focused. Hard to find a better management team. Second, do they have a reasonable valuation? We just covered this, and it is a yes, with a PEG ratio about 1 and much lower than peers SoFi, Mercado Libre, and C Limited. For this to be a strong yes, I would like to see it come at a slight discount with a PEG around 0.7 to account for the risk-reward and the overall stock market being at extremely high levels. Third point, does it have strong revenue and profit growth? A strong yes. Even with currency fluctuations, it's still growing revenue and profit at roughly 30% year over year, which is incredible for a company of its size that makes $13 billion in trailing revenue. And Overall, it's just impressive. There doesn't seem to be any slowdown in sight for this revenue and profit expansion. Fourth point, do they have a large total addressable market, or are they operating in some niche market? This is a strong yes. Currently, the market is huge right now, as it's the cumulative value of all financial services that can be provided to the population of Brazil, Mexico, and Colombia. It will just further expand as they enter new countries or hopefully new regions. And last point, are there long-term tailwinds? This is also a strong yes. Despite recent progress, a significant parts of the population of Latin America remain underbanked. Traditional banks do not deem it profitable enough to serve them with their high-cost branch network. Also, Latin American growth in digital banking will just accelerate with increased smartphone and internet penetration. Overall, my excitement for Nubank is probably shining through. I love this company and think it can get to a $300 billion market cap within 5 to 10 years, which will 5x from its current market cap of roughly $60 billion, as long as it executes its growth plan as expected. What are your thoughts, Dad, on Nu after going through it on your metrics?
Thank you, Scott, for the excellent review. Yes, I like to go over my metrics now. The earnings just came out, so the next earnings will be reported in November. Looking at the profit margin is 17.9%, which again is good. 3 of the last 4 quarters were beats, and the analysts I follow, there's 1 strong buy, 2 buys, 2 holds, and 2 strong sells. So that's not too good. The strong sells is not too good, but the strong buy and the two buys are good. So that's kind of a neutral thing. Okay, let's take a look at the charts now. The Bollinger Bands are not too volatile, so that's good. Anyway, the price right now is above the upper Bollinger Band, which is good. For the moving average, the 50-day is above the 200-day, which is a positive. That's generally considered bullish. The 200-day slope is negative, is sloping downwards, so that's a negative. The price is above the 50-day and 200-day moving average both, so that's a positive. The RSI is 57, which is neutral. A new statistic I'm following is the MACD, and it just went positive. So that could be considered, that could be positive, but we have to wait and see because it just flipped from negative to positive. So putting everything together, I would say that I'm a net positive. And that's because looking at the charts and looking at the metrics I follow, I would say I'm a net positive. In the short term, maybe watch it a little bit in the short term, but long term it looks promising. So Scott, I would recommend maybe a 1/3 position in Nu.
Thanks, Dad. This is exciting as Nu is the first company we both are a yes for since we bought Kospi before its earnings surge last month. Excited to add a 1/3 position to our educational portfolio. I agree that this is a phenomenal company with not one but 2 co-founders still in leadership that will ensure the company continues to innovate and grow while also excelling at their core fundamentals. Revenue and profit are both growing at market-beating rates, and even though the stock is up 10% after its earnings, it is still trading at a reasonable valuation, so I do want a partial position now. Thanks for watching our video. Please consider subscribing if you like weekly content that covers long-term, innovative-focused companies on this Father and Son podcast.